Sarah, retailers were warning about a weak December. How did Walmart avoid that?
Yeah, I think they showed some real strength in a couple of key categories. One was toys. So they had expanded their assortment online by 40%. They knew this was the first Christmas without Toys R Us, and they badly wanted to claim that market share, and it appears they did get quite a big piece of it. The other element is grocery. Walmart's been investing a lot in grocery delivery and in click and collect grocery, and this is an area where they have a real advantage because their fleet of stores is so large, and that was another source of strength for them on the digital front in the quarter.
Andrew, what would you single out? I mean, Walmart's got a redesigned website. They went after Toys R Us buyers. What in particular do you think helped Walmart close the deal?
Yeah, I mean, I think they're really firing on all cylinders across every channel. Brick and mortar has been really strong. They've invested in their store experience, and that's bringing consumers back. Online, obviously, was the headline here with 43% growth. And I would also echo click and collect as being a huge driver. And especially where a lot of other retailers faltered late in the season, Walmart, Amazon as well, but Walmart in particular, was able to get a lot of those last-minute sales because of their strong omni-channel and click and collect execution.
So let's talk about the competitive landscape and Amazon in particular. I've got a chart here in my GTV library which compares the market caps of Amazon and Walmart. Amazon in the blue, obviously much higher market cap than Walmart. But when you look at revenue, Walmart brings in far more revenue than Amazon. Now, when you look at profit, Amazon's profits dwarf Walmart. But it certainly shows a lot of interesting, conflicting trends at play. How do investors see this story, Sarah?
I think that they see that Walmart is finding its niche and finding its strength. Amazon, its growth is slowing down. It remains the undisputed leader with, 50 cents of every dollar spent online going to Amazon, and that is tough to compete with. But Walmart is trying to find its niche, not only with programs like Click and Collect, but by building this sort of galaxy of other businesses where it can court a different type of customer than it can through the main Walmart brand. This is why you saw it buy Bonobos. This is why it bought Eloquii. This is why it bought Bare Necessities. And this is how it's trying to steer the Jet.com brand that it owns. It's really trying to focus on an affluent urban millennial customer there, a customer who perhaps wouldn't shop at Walmart under other circumstances. So Walmart is trying to build this kind of stable of brands that meets customers in different places, and that's sort of unique compared to what Amazon is doing.
But Andrew, is Walmart, even online, ever going to be able to squeeze the amount of profit that Amazon is squeezing from its customers?
Well, a big part of Amazon's growth is their profitability, which comes from adjacent businesses with AWS and their fast-growing advertising business, and those businesses have a totally different margin profile. So I think the big question here is Walmart's core retail business is moving in the right direction, but are they going to be able to layer on some of these more profitable business lines? They've talked a bit about the advertising business. It's still small, but I think they wield a ton of potential there. Amazon has a really big head start, but I think that's something to watch over the next couple of years if they can layer on a much more profitable business, leveraging the enormity of customer data that they have at their disposal.
Now, Sarah, how is the grocery battle shaping up? Walmart is the leader, but of course Amazon in that territory and other grocery chains doing more delivery as well.
Yeah, so Walmart has really strong geographic coverage. I think they said something like 70% of the U.S. population is covered by their pickup services now, and the delivery, for the delivery service, it's somewhere in the more 30% range. That's pretty strong coverage, and when you compare what Amazon is working with, Whole Foods has only 400 some odd stores compared to the thousands of Walmart stores. That's a real advantage for Walmart, but there's no question that the dynamics are changing. Kroger, which is a major grocer and major competitive force in this space, has struck a deal with Ocado, where Ocado, the innovative British grocery giant, is going to be bringing its technology over to the States, its automated warehouse technology, to help Kroger ramp up its click and collect and delivery game. And so this is a fast-moving, fast-changing landscape, and it's so little penetrated, whereas certain categories now are 30, 40% online. Grocery is just 2% online. I think it's really anybody's game.
Meantime, the CEO of Walmart, Andrew, is saying that the online sales strength is actually weighing on gross margin. How do they intend to combat that?
The online sales strength.
Right.
You know, I think that right now a lot of where that's coming from is Flipkart, and they know in the near term that Flipkart's going to be a drag on those margins, but really that's a long-term play. So India is potentially this massive, massive market. I think everyone's hoping that it becomes the next China as an e-commerce market. That may be a little bit ambitious. Nevertheless, it's about how that plays out over the next 5 to 10 years. So in the near term, they're going to have to incur some of that hit. But I think that it's smart strategically, and they seem to be guiding the street to understand what that's going to mean to their margins.
Of course, Sarah, that Flipkart acquisition was hotly contested. What do we know about how well the acquisition is going?
So we don't know that much yet. I think what everyone was watching for today was we just learned about these new e-commerce regulations that are going into effect in India, which create some challenges for both Walmart and Amazon as foreign participants in that market. And we did hear CEO Doug McMillon say on the call today that Walmart is disappointed with those regulations and is going to have to figure out how to work within them. But I think it's noteworthy that they did not adjust the guidance, right? They had issued annual guidance in October, and they did not revise that today. So I think that's a clue to us that while they will have some work to do to adapt to these regulations and the challenges they present, they don't perceive them to be catastrophic for their progress on Flipkart. And as was mentioned earlier, Flipkart is really a long-term play, and they're going to be watching how that evolves over a years-long period.